Welcome to Akshay Money Management YouTube channel. Wish you happy and prosperous 2021. We have seen a lot of sectors is been recovered from the bottoms, but there is one sector which is not recovered, and that is entertainment. So today we have a special guest, Mr. Mayur J. Roy, who is not only does a short movies, and his lot of movies is been got awards and is been listed into many film fairs. And also he advised to the many startup companies like Flipkart, Ola, and 3M. And also he does a advising for the many political parties. Recently, we have seen his advice is been given to the CM, Mr. Kejriwal, Delhi Chief Minister.
फिल्में सिर्फ तीन चीजों की वजह से चलती है, एंटरटेनमेंट, एंटरटेनमेंट, एंटरटेनमेंट.
Hi.
Hi, Mayur. Thanks for coming and thanks for your time. This has been recovered, but this entertainment sectors is still in the 50% less if you see the PVR and Inox stocks kind of a thing. So I want to know the outlook of the entertainment industry, how it looks in 2021.
Hi, Narsimha. Thanks for having me on your channel. So, like you said, yeah, entertainment is one of the few sectors that is really struggling during this lockdown. And for obvious reasons, because entertainment relies heavily on people participating, physically in an event or, like a theatrical release. So in the coming year, you're unlikely to see big theatrical releases. A lot of the rights are being sold directly to OTT platforms like Netflix and Amazon. So as an industry, people are going to be hesitant to invest. People are shooting, things that are already in the pipeline. So you may have to wait a little longer, but you'll get a lot of entertainment on Amazon and Netflix.
Yeah. So how you guided a lot of startups? You also guided Akshay Money Management to start this YouTube channel. So this is your advice that we are continuing since from 1 year we completed from Jan to Jan. And now any new films you are shooting up? Are you advised?
Yeah. So no, nice job you're doing, because a lot of your videos we watch, and then I've noticed that some of the advice you give, I get a chance to check it the next month. So one good thing is you're committing yourself on video. So that's the mark of you have high integrity. So whether you give a good forecast or bad, it's all on video. So yeah, no more short films during this year. I'm not taking the risk of going and shooting. Some of our locations involve, a lot of crowd, and we can't wear masks. So that's the problem. If we could wear masks and shoot, it would be okay. But the actors can't, and in that environment, it's very tough. So unlikely to do any shooting. Maybe spend more time in creating content.
So we may see still entertainment stocks trading maybe at 50%, 60%. So a good opportunity for the viewers. If you want to pick it up for the long term, this will be the good idea, because PVR came from 2,100 to right now we are seeing almost like a 970. Now recently it's picked up because of the few areas PVR screens has been opened.
Actually, I had a question for you, which is that during the year end, right, we saw that the market actually recovered pretty well compared to what had happened during the announcement of the lockdown. So does it make sense to do a lot of profit booking at this time, or should we wait, for another month or two? What is your advice?
Yeah, let me, there's a lot of questions has been asked, a lot of my customers also. So first, let me bring it down the broader picture of the market, because first one should understand before investing, there's a market cycles. If you see the market cycles, I'll just present you. So let me take you way back in 1984, where the Sensex is started. So if you see, last video I had shown the bulls and bears. Every year bulls and bear comes. But here, if you see, the market, there's a cycle of 8 years market cycle. In the 8 years market, either it will be in the uptrend or it will be in the flat. So let me show you. 1986 to 1982, the market was an uptrend where a CAGR return was in the 8 years was 37 percentage. If you see next 8 years, it is a flat year.
Yeah.
Somebody might have seen that Harshad Mehta case, all these things happened in 1982 to 2000. In this year, in 8 years, somebody has seen only 4% CAGR returns. And that is there's a bad time for the equity people. They exited in the losses. Somebody has exited in the bottom of the market. So you see two cycles. One cycle is an uptrend, another cycle is a flat. So another, if you see the next after 8 years, we have seen the 2000 to 2008 was a very golden period after Y2K, all this issue happened. So you have seen the CAG return of 17% returns in the next 8 years. But after this one, again, if you see the market is a flat market, again in the from 2008 to maybe 2016, we have seen the flat year, maybe a 5%.
Got it.
So right now, if you see, still we have a juice. Means 2016 is a what we have seen the uptrend market, and we have seen the hardly maybe half the way we had gone. So what is that? If you see, observe it. 2008, if you see it, everybody says that 2008 is a big crash happened, and then always they compare with the recent crash in 2020 COVID. Also, they compare with the 2008. So whenever if you see the bull market or the top market and the flat market, whenever this scenario market, whenever the crash happens, I can compare with the rubber ball and the some iron ball. If iron ball touch happens, the pitch will be very hardly small. So if you see in this market, recovery happened, but it took almost 8 years to recover to come to the same levels.
Correct.
Whereas in this uptrend market is like a rubber ball. You put as much as stress, it goes 40% less in the March, and it took hardly 2 to 3 months to recover and come back to new highs. Today we are sitting at all-time high, a new highs we are sitting. So this is the something one should understand, and you cannot make the money every year. Only that 8 years is what you can able to make the money. After that one, you need to wait for next another 8 years to come. So if you're expecting any correction, there's a good here, because if the 40% down happened and again came back, so next 10%, 15% fall, you should not be fearful.
Picture अभी बाकी है मेरे दो पिक्चर अभी बाकी है
And so then what's a good composition now? Because, till now I was putting more in equity because I was able to take the risk. But now, given the situation and how the year is turning out, both for as a profession in entertainment, but in generally the inflation, should I put more in equity, more in debt? What kind of a sector makes sense?
So if you are aggressive investor, I recommend you can be 70% in equity and remaining you should be in the debt portion. Today, debt plays a major role because somewhere the profits what you made it, you should start doing a regular profit bookings. So, or if the viewers, if you want to have a moderate risk, then have only 50% equity, remaining gold, and you should have alternative asset classes. Also, you should have it, and debt also you should have. If you are a conservative investor, then I recommend be in the large caps, just 30%, remaining you spread across your 70% either in the fixed deposit. These are what ideally which will suit, but also depend upon your goals. If you're having next year goals, you should take your financial advisor recommendations.
And the PE is now at a all-time high, right? It's almost 40, I think.
Correct.
So what do you advise?
So if you see, yes, PE is all-time high in the large cap. But I recommend if you're able to take a small cap still PE is hardly a 20 PE. So still I feel the rally is not started in the small cap, because the small cap we have seen 34 PE. From the 34 right now it is discounted at 20 PE. So still we have juice in the small cap, and somebody can take the high risk. You can look into small and mid cap.
Okay. So in fact, so if we have no urgent need for money, it is better to just stay invested in the market and not profit book, right?
Exactly. So a lot of experts you may see in a lot of YouTube or papers, they're expecting that 52,000 Sensex may touch. So until unless I see major accidents like border disputes or any kind of a, if any coronavirus 2 also comes second version, we don't worry because we know what is the what are the precautions should be taken. So until unless
Yeah.
unexpected some event happens, I don't think that you should be worried and doing the aggressive profit booking. You should does not do it, but regularly small portions. If you already done a very good profits, then doing profit booking is a good. But I have the proportionate as I told you.
Yeah, I'm hoping I'll be richer next month than I am now.
Definitely. If you are following Akshay research tips, what I'm giving from the Jan 2020, so
Yeah.
I now here if you see Nifty has given in a 1 year 18%. If somebody had followed that Akshay research, it may be starting from Alchemine, Deepak Nitrate, ICICI Bank, or L&T, and the list goes on. They had given 72% returns in a 1 year against 18%
Oh.
Nifty had given.
Okay, so thanks a lot. That was very useful.
Thank you, viewers. So we'll catch up in the next February series nearing to the budget time. Thank you for watching. Please subscribe and share it.